Good morning. It's Saturday, May 14th, and it's almost summertime. This is Julie, Untitled Trading Strategies, and this is a special Saturday session for explaining again the combo high-low inflections with the direction guide. And it's going to be a real treat for you because I'm going to really explain more in depth how I approach the markets and what I look for and when to take a trade. Trading is damn hard. There's no doubt about it. And I've blown up a trading account or two. And I'm sure that anyone who's really taken a long time to try to figure out what it is the markets are doing, when to approach a market, you use different methodologies. I've heard a lot about order flow, volume profile, pivot points, Fibonacci's, moving averages, volatility, momentum. There's so much that helps us address a market. And this is my way to address the market like a golf shot. When is the best time to come in? Find a market that is behaving, as I call it, and try to approach a shot, take a trade, and make some money for that day, and go home, take the marbles off the table, and be happy. Trading is hard because the markets don't set up in the same way very rarely. And when we find a market that's set up the same way, then we want to jump in that market like Crude did from October through January of 2015 to 2016. You just traded short and you just dove in. That doesn't happen that often. For instance, on the weekly, we're in a downtrend on the euro, but we're coming up to our volatility band and we're starting to bounce back down. Not sure if this is going to break through and make another higher move up. It could, but right now we're just in a retracement on the down volatility on the weekly. And that's reflected on the daily. Here's that retracement, and now we're pushing down on the daily back to our volatility of the upswing. So how do you go about, trading this? There's the 60-minute showing that downswing on the daily, and here's the 15 getting even deeper into it. So what is the best way to address a market when when all four of these aren't matching the same direction at the same time? How, we've got to eat. We've got to be able to come into a market and take some money out. So here's how I approach it. I have devised a methodology to do just that. I wait for my direction guide to give me one solid direction on a higher time frame trend, and then I know that I can go to that market and trade that direction. I have this market analyzer set up on the higher time frame trends. It really just shows me this market is trending in the same direction. That's different than volatility, and it's different than open to close. Sometimes the open to close can be opposite of the trend. So there's nuances to this, but this direction guide template is set up for these various markets on the open outcry, the regular trading hour session. So you don't have to do anything but put your template on 24/7. So when the markets are open in the US and I see a directional trade Price is trading away from the previous close and the current open to the downside, and it has passed the current high-low, and it's passing the previous high-low. And on the top band, the weekly, daily, 60, 15 are all red. I get damn interested in that market. That's when I know that I want to trade that market. So how, you can trade it just like this. The direction guide template on its own is wonderful. It comes with the market analyzer, and I've got filters to just get you in the market. Okay? But currencies, I have a better methodology tied to that volatility on my high-low inflections. And this really helps me address the ball, address my shot, and take the trades as much as possible. What I like to do is put 2 of these on my chart. So let me add another bloodhound, and I'll show you what I do. I will put a second template on my chart. It's the same template, but I will just put my volatility band on it. So here's my momentum, and here's my volatility band. So when the market is weekly, daily, 60, 15, all red, I can just relax. Oops, sorry, wrong one. I can just relax, see that my current open to close is trading in the same direction, and I can go to my super trend indicator and just put it on that short inflection, and it gets me in the trade automatically when the market, that's like addressing the golf shot. Okay. Another reason I like these is if I see that the white super trend band is underneath it, I can manually, discretionarily disregard these as a lower probability trade. I've learned that when the super trend indicator goes sideways, that I'm going to be in a range and that downtrend is over. I want these bands to be sloping down, go sideways for your consolidation a little bit, and go down. There is not a long white underneath it. I've got the short white coming up representing that retracement. And when the bar makes its turn, this is my signature. This is a J Auto Trading Strategy signature. I get in at the turn. Okay, so here's your volatility. If you just want the super trend inflections short, you can just take those. You can take the reversal short. That'll get you anything that's going short. Or you can just see what your trail looks like if you're going to use your trail as a stop to keep you in as long as possible until you get your profit. And then I would just take my marbles off the table once I got, my limit is, 1,000 a day. Once I get my 1,000 a day, I take it off. That's on one contract. One contract. So once you start learning this system and you get used to what I've done, and you want to double your contracts up on these terms, you don't have to wait as long and you can exit the market much faster. but that's up to your own position size and budget, you know. So learn the difference between the retracement and then these levels, the market profile levels, the VWAP, which can be adjusted to your bar size. You can change your bar size for your budget, and that's explained in my documentation once you purchase a template. But use the markets for your trading the best way to get in the market long or short. If you see that the prints are primarily short and you've got your slope coming down, you may just want to put it on a short. Oops, that's long. Put it on a short and then just hit them all. But I use this strategy when I trade. Here's another one. Here's a good short setup. I use this in my trade room, and I use this when I trade. This did not execute because it broke through the super trend. So the trend had to reestablish before my super trend inflection will get you back in. But if you don't care that it broke through just a little bit, breakout, fake out, stayed inside your higher volatility band that you give yourself permission for the market to behave. It's that behavior that you want to look at. And let me show you what I mean. You don't want to be trading a market that is going sideways and printing red, white, red, white. There's no high odds on that. This is just sideways. I prefer for a market, see, it's just red, just going sideways. I prefer for a market to make a move, to see the volatility bands shifting, wait for a retracement, and then get in. Don't chase the market. There will be a setup for you. Okay? You don't have to panic or think that you're, out of luck. When we come to these levels, I'm really guilty of taking my trade off because I'm a day trader. I know that when I get to the upper VWAP or the lower VWAP or previous yesterday low, high, whatever my intraday level is, I'm real guilty of just taking the trade off instead of allowing the trade to work out and go to a lower level. So I'm losing money by doing that. But then I realized I can take my profit, wait for retracement, and just get back in for a deeper flush. So I've started using the markets the correct way, and I started doing much better with my trading, much, much better. So recognize that when you're running to VWAP, you're running counter trend trade. Counter trend trade to the weekly, daily 60-15. It happens because you're making a move either, you're making a move either to the prior day close, or you're making a move to VWAP. And if you haven't made your money trading, say you lost some money here, and you see a good counter trend setup happening, and you know that the target, where that target is, by all means, jump in the market and grab one of those suckers and get yourself back to even, and then, or back to your target. I do recommend that you trade with the volatility when it's set up with the weekly, daily 60, 15. But if it's not, or if it's a broken market, like right here, the yen is broken up, I would really myself stay away from that market. But if you see a short-term setup, you can definitely go ahead and take the damn trade. I mean, we're here to make money, aren't we? That's what I'm just saying. You don't need my permission to counter trend trade, and I'm not writing rules that you only counter trend trade or you only do that. That kind of crap is gone. Those days are gone. We're here to make money. So that's all I'm trying to emphasize. So, but otherwise, recognize what the volatility is doing. Set yourself up to take advantage of that volatility at the right time. Okay. So let's look for another. Here's the down move. So we see the volatility. We see that it's in our longer trailing. All indicators look good. Take the trade. Take the trade. Make the money. And the more of these that we can find the setups for, the better. Let's look at the, it works on all markets. NASDAQ. NASDAQ's been ranging up and down. This is the index futures. So you can trade it up and down during the range on your lower time frame, just like we did on the higher time frame. Put your band in here and then take the trades. Here's a long. Or just take the super trend ones. It works on all markets. Let's look at crude. Crude got really ugly yesterday, I tell you that. We went flat, sideways. But here was a good trend. This was the EIA report that came out Wednesday. See how it's moving above my level, which you will find out what that is once you get the templates. Move this back over there to that Wednesday. EIA day, EIA day. There it is. So how do you trade this? You, you trade it like this, right? Or you take your reversals and just get them all. You get them all. So that's the strategy. Put your volatility on your charts and trade the short-term volatility. And you have many other things on these indicators that will help you, hopefully, with your profits. And learn to recognize the market, that when the market is printing sideways ugly, like it did here, it's just damn hard to make money. It really is. You have to really set this up and trade directionally as much as possible with weekly, daily, 60, 15, and still it was hard. Look at that, weekly, daily, 60, 15, and look, oh, I keep doing that. And look how hard it was. The volatility, people were trying to slam it down. This is a prior point of control, and the traders were trying to slam it down on that prior point of control. You just got whipsawed up and down. So sometimes the markets cannot behave. And do you see how you have your red, white, red, white, red, white? You don't have a market that's set up and behaving. which looks like this: white, 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 retrace, white, 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 retrace. So you'll get used to seeing this. You'll get used to seeing if the markets are behaving within the volatility, or see all the wicks, just total indecision. And now we have a breakout higher. I think the market's trying to get up to 50. That would be a good guess. So, but then Janet Yellen telling the banks this week to prepare a stress test for negative below zero interest rates. Oh, good grief. So we're going to have fun with some volatility coming up in the markets. At least we know how to trade it now, right? We know what to look for. We know when to look for it and how to do it. All right. My templates are very affordable, much lower than everybody else's, and I think that they're much better also. So more bang for your buck. Head over to the website, pick up the custom template and the direction guide, and you got my package. Thank you so much. Bye-bye.